What's the road ahead for the equity markets given the recent breakdown that we've seen? A.Srivastava, CEO at Dimensions Consulting, now joins in on the phone line from New Delhi.
Ajay, is that something that people are even thinking of looking at? 1.5% off on the NIFTY, the NDF market showing the currency likely to weaken further. All hands off the table, or even selectively start looking at things?
No, all hands on the table, and you remain on the short side of the market. That's the bottom line. Simple, straightforward. You know, the point is that the leveraged companies in India are going to be in serious trouble. And after the RBI's governor's statement date for yesterday, a lot of people didn't catch it. They said that we're going to have a very strict regulation of restructuring of companies with promoter guarantees involved, with equity stakes on the pledge, which puts a different dimension to 60% of the NIFTY companies or Indian companies. And I would believe that if those are put in place, you would see half the companies would lose their ownership and would be sold only for debt holders, and equity holders don't get nothing. So it's the time to be short. Just leverage companies, don't bother, just short them. They're going one way, that's it.
Yeah, so I remember, Ajay, you've been bearish. By the way, the currency is at 61, 67, so new record lows. I don't know how many times during the day we'll probably get to see this, a new record low coming in. But Ajay, I remember earlier conversations, you've been very bearish on the index even when we went up to 5,900, 6,000. Right now, the tune that you are singing is different from then, because then you didn't recommend a leverage short. Now you're saying all hands on the table and a leverage short. You foresee another 5-10% at least on the index?
No. Two things. One, we have been talking of and doing leverage short for at least now 2 to 3 weeks minimum. And as I said, the momentum got increased when the RBI governor tightened the liquidity, because that's a point of time where the only hope of these companies was to recapitalize themselves, and that was taken off the table. One. Number two is the environment has changed so dramatically. You know, for these companies today to do anything of any kind is almost impossible. So therefore, you are in a situation where it is going to crack. And the only safe harbor was the consumer companies, which still remain a safe harbor to a large extent. But it's difficult for them alone to carry the market through between IT and consumer. How much can they carry on? The second point is that if you look at this company, let's take PRAKASH, and for disclosure, we are short on the stock today and continue to be for the last few weeks. You look at this interest and EBITDA. EBITDA is barely now covering interest. Now, where does he pay the principal from? So when you look at these kind of companies, the GMRs of the world, the PRAKASH, the DLFs of the world, they're barely able to cover interest outgo. Who's going to pay the principal? And if they want to do asset sales, that's not going to happen in a hurry, given that foreign investors are not coming in at droves in this country. Nobody is investing and locals are not buying. Therefore, the asset sale is on hold. The EBITDA is equal to or less than interest. Loan repayment, they will all go for restructuring sooner or later. And if RBI says, give me the pledge on the shares or give me personal guarantees, the goods is cooked.
And you have the rupee once again at record lows now, 61.67 against the US dollar. Ajay, what would be your view then on some of those IT names? Because a while ago you had mentioned going long on the likes of Tech Mahindra, TCS. What's the call now?
We remain long on that, and we will not cut our positions. As you said very clearly, we believe it's an investment not for just for immediate future, for the next year to 2 years. And because the rupee slide is going to be one way till maybe it's got 63, 64. So once the hedges get off of the IT companies, they will really start to encash at 60, 62 rupees to a dollar. And that's going to be a huge thing to the bottom line, one. Number two, the attrition scenario is changing dramatically. As the economy goes into bigger spin than what we anticipated, people are not willing to move jobs today. And therefore, these companies will be able to hire people and retain them at a much lower cost compared to what they had visualized 2 years back, perhaps. So the cost structure is going to be very, very good. The revenue structure is fantastic. So you will not want to sell this stock. You want to remain in IT stock. And I would not be the one to say these are topped out. I think the topping out is going to happen maybe a year and a half from now on.
I've heard that commentary of IT stocks topping out every day for the last 6 months. They just seem to go one way, and that is north. Ajay, great point there about the wage costs, of course. One last thing, Ajay, really. We might actually get the finance minister anytime, so we'll have to cut to that. But Ajay, just one last thing. You mentioned about some of the highly leveraged companies. What about some of the PSU banks? We've heard this argument about the book possibly not even remaining a book in certain cases. These stocks have fallen quite a bit. Do you look at them at all, or are you short even in that basket?
No, we have been short. We have been closing some position as of today because they've really gone way below our target price. But the problem here is that, why you don't want to go long is because each of the banks will need capitalization very soon, and therefore there'll be a serious dose of equity capital coming in from the government. And at this price, if it comes in, that leads to serious increase in government shareholding, which, I don't know, it'll take up to 80%, maybe 90%, and you don't want to be in companies with 90% government holding. So going long is becoming very, very difficult because the eventual situation is going to be they need recapitalization. Government check is going to go up dramatically. Election is on the corner, so the freebies are going to be strewn around the place. So you really don't want to go long, but you need to book your profit on short sometime. And I think the time has come to take the short profit off the table in most of these stocks.
And Ajay, what's the view on that beaten down sector, capital goods? Because when it comes to numbers, you only see results which are disappointing quarter after quarter. And when you see those kind of cuts on names like BHEL, it's rather unnerving.
Well, okay, again for disclosure, we are running short position on BHEL as well. The point is that I think most people are more optimistic that the capital goods cycle will change. Government is trying, let's be honest. Government is trying. But the reality is that the wheels don't move like this. The wheels will take BHEL to get an order and to deliver will take 2 to 3 years time frame. So for next 1 to 2 years, it has to rely on its order book. And the order book is weak today, very weak on the delivery side. So, one hates to say this, but these are lambs to slaughter kind of companies because it's out of their hand now. No matter what the government does, the redemption is going to be 3 years down the line. So equity market will come back maybe a year's time or 2 years' time in hoping anticipation. But today it's a lambs to slaughter.
Ajay, the number of companies that you've been short on, I think you made a killing. I think it calls for a party as well. But and I hope you made that much of money. Really hopeful for you. But
thank you, Gaurav.
No, but just one final word, Ajay.
You also have long which you will lose money, okay? So don't forget that.
Okay, Ajay, just one final word really. At 55.93, your gut feel, I won't hold you to these levels, but your gut feel from 5600, how much lower do you think we go to in the current leg itself?
I think we should be touching another maybe 100 to 150 points before the recovery or at least stability happens. 3 to 4% I think is par for the course because only for the reason that technically nobody is willing to close the short positions. That's the whole problem in the system today. So it's kind of one-way street. So there has to be some event which will take this market back or at least stabilize. Until that event doesn't occur in a couple of days, I think 3 to 4%. But beyond that, I don't believe the NIFTY will crank because we are reaching pretty safe levels for stocks like ITC, Liver, Reliance, etc., which are holding the NIFTY afloat. So unless HDFC Bank cracks, that's a big one to crack. If it doesn't crack, NIFTY is good for another 150 point down, but nothing below that.
And what's the call on something like a financial technologies, given that recent bout of sell-off and all of the fundamental worries that have been plaguing the stock?
Okay, let me explain to you very simply that at this point of time, we are running a long in cash. We are not in a futures market. For instance, it's a banned product to square up at the end of the day. We have started to take positions at about 120, 125, 140, and we remain long for that. This settlement will, I think, go through. Even if it doesn't go through, I think the promoters will find the money to pay this money. And at 300 to 400 crores market cap, this company's got a lot of value sitting there. It may take time, but we are long right now, and we believe that for cash investors, it could be a good opportunity to buy into this company because even if it gets sold or a new promoter comes in or he settles the whole NCL issue, still there is substantial value. So we are long and we believe it's the right place to put value in, and you will see some decent appreciation coming around.
Great. That's a different answer. I'm glad you said that, Ajay. Good to hear a bit of a change in an otherwise bearish tone. But thanks so much, and thanks for being so candid, Ajay. Really good having you today.